Let's get a broad look at the stock market here. TSX on track now for a return of well over 20% this year. Martin Cobb joins us, Senior Vice President in Equities at Lorne Steinberg Wealth Management. Martin, always great to see you. Thanks very much indeed. I know the viewers are sick of hearing me asking this question, but is there euphoria in the markets, stocks hitting record after record?
Yeah, good morning, Andrew. It's a great question, and one, I get a little bit bored of answering too. There are pockets of euphoria, without a doubt. If you look at some of the valuations being attached to businesses, we talk about AI, I'd say quantum computing, throwing that in there. My greatest concern is just the whole spend on AI infrastructure, and in terms of the return ultimately that needs to be generated to justify the sort of valuations. So here we are. Markets are strong. I think it's interesting. Maybe Barton Biggs summed it up the best. Bull markets, he said, are like sex. They feel the very best towards the end.
What was that? What was that analogy again?
Yeah, it was Barton Biggs, one of the famed strategists at Morgan Stanley. He was talking about bull markets. If you study bull markets, the returns you get towards the very end of them tend to be the very best. And so his analogy was comparing it to sex, that it feels the very best towards the end.
Oh my goodness, I wish I hadn't asked you to spell that out again. But anyway, well, I guess we got an adult viewership. What you say, it's a market of haves and have-nots. So people very skeptical about some groups and near euphoric about others?
Oh, absolutely. And you see it within the technology sector, but you see it even across the board. There really has been, it feels like differentiation between glass half full and glass half empty stocks, and regardless of the news. And that always gets me a little bit interested. What is overlooked? John Templeton talked in the past, not looking where the outlook's the brightest, because you'll find no bargains there. Look where the outlook is the worst, and that's where you tend to find bargains. And so I just like to look for stocks where there's lots of apathy. And if you look at the market, there's technology stocks, financials more recently have done quite well, some consumer stocks, obviously materials, gold, but there's just other parts of the market nobody talks about anymore, and that's usually where you find some interesting ideas.
We'll get some of those later. I wanted to get your take on these extraordinary remarks by the Deputy Governor of the Bank of Canada. I'm not sure if you caught that, indicating that she thinks that the Canadian banks are an oligopoly, and arguing that this tends to hold back Canadian economic growth, productivity expansion. I was kind of blown away that a Bank of Canada official would say that.
I would agree. I come from the UK, where banking is much more competitive, has been historically. If you look around the world, there's really two different types of banking markets. There's the kind of Swedish model, which Canada is very much, where banks are protected. They're allowed to earn supernormal profits. Competition is suppressed to some extent, and they have good capital buffers and can bail themselves out when times get tough. Then you have the American model, where there's 6,000 or so financial institutions in the banking sector. They compete hell for leather, and then ultimately at some point things go a bit pear-shaped and the taxpayers have to bail them out. The Canadian model has been seen as being a great model because of how we dealt with it through the global financial crisis, 15 or so years ago. And here we're now starting to see chatter about more competition, lower capital levels. That's becoming the focus more of regulators. But yes, you're absolutely right. For a Bank of Canada individual to say that might be saying, probably pointing to the truth. But ultimately, do they really want to have, a US-style banking market up here? I would suggest not.
I don't know. Shouldn't it be capitalism red in tooth and claw? Say one of our big banks failed. It would be very disruptive. But, I mean, that's how the system is meant to work.
Yes, as a consumer, I completely agree with you. As a shareholder in some of the banks, maybe don't quite agree so much, but we should have more competition. Just some of the areas where they make money in things like foreign exchange, etc., still very profitable for the Canadian banks. There's a lack of competition. Again, back in the UK, you have apps like Revolut, etc., that allow you to move money, across currencies at next to no cost. Products like that just don't exist up here. And so, yeah, I would like to see more competition, as a consumer, certainly, both in banking, telecoms, LCBO. We could keep going on talking about areas where I'd like to see more competition.